Here's a topic that's probably on your mind if you're looking at real estate these days. How will another rate hike affect our real estate market that's highly sensitive to interest rates? The rate decision is tomorrow, but honestly, if it doesn't happen tomorrow, everyone expects it to happen one way or another this year, and so it's already fully priced into the bond market. What this means is that we've already seen this get reflected in fixed mortgage rates too, and we're just waiting to see the lagging housing market take these changes into effect. This probably won't just affect the housing prices, but it's probably going to trickle into the rental market too, which might then end up giving support back to home prices. Wait, how does this work? Well, that's what we're going to be talking about in this video. Let's get started. In just a matter of weeks, we saw a significant shift in bond yields, and this pushed 3-year fixed mortgage rates from 5% at the end of April to 6+% nowadays. But here's the thing. Because of rate holds from before this change, we haven't seen the full impacts of this yet in the housing market. Now, if someone started a rate hold starting at the end of April, rates might be held until the end of August. So that's why the housing market is definitely lagging rates these days, and we do expect prices to continue to soften throughout the summer. Now, it's also important to note that even though real estate prices are impacted by changing rates, it's not actually black and white with math. The reality is that emotions are involved when buying a home, and a lot of people are still eager to buy. The other thing to keep in mind is that with inflation rising, we've been also seeing rising wages and rising rents, and these have been helping to support home prices too. Now, the last thing to keep in mind is that when you're looking at price changes, we'd suggest that you look at trends over a time period as opposed to just looking at two specific dates in time, which can often get skewed by outliers. So here are some price trends in Toronto semis. From January of 2022 to January of 2023, when 3-year fixed rates surged from 3% to 6%, if you look at how prices should be impacted purely by interest rates, prices should technically go down from $1.5 million to $1.05 million to keep affordability the same, and that would be a 30% decrease. However, the actual price drop that was experienced was a lot less severe in comparison, dropping to $1.15 million. Now let's look at the next period from January of 2023 to April of 2023 as 3-year fixed rates decreased from 6% to 5%. And here we do witness a price reversal. The expected prices should go from $1.15 million to $1.3 million, or a 13% increase. But prices here actually went up to $1.4 million, which was also another $100K higher than what math suggests it should be. Now, interest rates went up again from 5% to 6% from the end of April to July of 2023 this year, and we haven't seen the full price effects yet. Prices should soften, but we really don't know by how much. And here's the thing. As much as home prices are affected by higher rates, not everybody is as sensitive to it depending on how much debt they have on their homes. And if they're not as sensitive to interest rates and they know that higher rates are affecting home prices, then if there's no immediate need to sell, homeowners will be holding off on selling. If we zoom in specifically to the investment side, investment freehold owners who are getting market rents are also likely okay. Higher rents have been supporting higher rates, and so holding power is still pretty strong for these people. The reality is that the bulk of those who are selling these days are investors who are getting much lower market rents but are still feeling the impact of higher rates. And this combination ends up being much tougher to carry for another year like this. And so these are the most likely sellers in this current market. Now, if we look at the other side of the equation, a big majority of buyers are end users who are buying out of need. And because more homes are rental properties these days, we end up seeing more existing rentals being converted back to end user homes in this current market. And this ends up reducing the rental supply. And when that happens, there will be more competition to the existing tight rental market, which would probably continue to take rents higher. And then higher rents will continue to help support higher property values. Now, another group of buyers these days might be investors who are willing to buy existing rentals with lower rents, and that's because they see the potential for value add once they turn over the properties. But because there is much higher risk, work, and money involved, the value add has to be worth it, and this is where the bulk of the deals are these days. So again here, once tenants turn over, property values will also continue to come back up again, and this will continue to give further support to home prices. So to sum it all up, we will probably see prices soften with higher interest rates. And if there is a motivated seller who has a tenanted property with lower rents, you might end up being able to get a deeper discount. But this motivation to sell isn't the case for all homeowners. Fundamentals will continue to give good support to home prices, and so we don't expect this trend to make real estate free fall from here on like what happened last year. Now, if you are looking to buy, the best advice from us is one, to familiar yourself with the market so that you will know what is actually a good deal, and two, get financially ready so that you can pull the trigger once you see a great deal. We are in a time where you can pick up a property for slightly lower than the highs set this year because rates have climbed. And if you are willing to take on more rental risk, then you might get an even better deal. And these types of deals are not on the market all the time. But when they do, we know where they are. We're a real estate sales brokerage that specializes in buying and selling Toronto freehold investment properties. And if you need help getting started, just take the first step by heading to this link right here to book a discovery call with us. If you enjoyed this video and found it helpful, we would love your support. Give us a thumbs up and hit that subscribe button to stay up to date with more awesome content from us. Our channel is all about real estate investing in Toronto, covering everything from market trends to housing policies to interest rates and the best investing strategies. We're here to make your real estate investing journey easier for you, and so our team offers services like planning, analysis, buying and selling, renovating, finding tenants, and even property management. If you want to learn more about us, just head over here to check out our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.